Andrew?
And we are live. What's going on? Hello, everyone out there. Thank you for joining us for another Mortgage Leadership Outlook. Really appreciate you joining us for today. I'm really excited to have today's guest on. Today's guest, we have a Josh Friend, who's a CEO and founder for InSellerate, but and Josh is so much more than that, and we're gonna dig into a little bit about Josh's history. We're gonna go, a little bit about what Josh sees coming up in the future. Tap into his brain to get some ideas on the latest innovations in mortgage marketing. So Josh and I were just having a quick chat talking about his history, because I think it's important to understand, who is this guy? Josh, he seems relatively young. He's seems to have be talked about a lot and when it relates to fintech and mortgage marketing, but we're going to go down history lane. I'm going to dig into Josh's past. So Josh, thank you so much for joining us. First off,
Absolutely, Andrew. Love being part of this. Thank you for having me.
wonderful. Great to have you part of this. You guys have been doing some great things. You had a product launch yesterday, and you're going to be on our Originator Tech coming up on September 9th. We're really excited about that. But so going back to your history, I want to talk about so how you got brought into this business. So you're brought into this business. You start working for what I just look as an iconic organization. You're working for IndyMac Bank. IndyMac Bank, this is a company that just was ahead of its time when it came to technology, product innovation. I hired some of the best people in the industry to work for them. So talk to us a little bit about how you found yourself working for IndyMac Bank.
It's I'll just say very lucky, and I was blessed. The story goes, I was 22 and I was still in college, and I found I was going to be a dad. So I need to get a full-time job to support a family. And I was going to school to be a civil engineer. That's where I thought I would go down and be an engineer. That'd been my fourth year. And I went out there to try to find a job, or any job I could have, and then I'd still finish school. A friend of mine had graduated, 3 or 4 years earlier than I did. And he was working at this company called Loanworks. Loanworks was IndyMac Bank's first call center, right? It was before they were a bank. And he was doing well, making money. And we were close. And he's like, a lot of these sales guys are doing really well. You might be able to sell loans. Why don't you come in and interview? And I said, let's do that. I came in and interview. I quickly, I became very good at it early on. It was something that I, excelled at. I just did a lot of systems and processes. I built my own, even though IndyMac Bank was very much so far ahead of technology. They're still, their platform, EMITS, is still more advanced than I've seen anyone in the industry today. The risk-based management pricing system they used to have, automated underwriting platform, I still have not seen a system in our industry that is as advanced as what that was. So they definitely had great technology. But they didn't have great follow-up technology, CRM, automation, and so forth. So I left IndyMac Bank after about 2.5 years, did quite well with that same person who recruited me and said, come get a job. We started our first mortgage company. And so that was in 2004.
So that's 4 years after you started in the mortgage business, you're opening up mortgage companies.
Yeah.
Yep. That's great. That's amazing. Listen, you're barely able to actually, 4 years into this, and give us an idea. What kind of volume were you doing at that point?
I think our first year, we did about 500 million the first year.
500 million. So, how many units is that?
Units? We probably did 1,800 units, probably year one.
Wow, that's fantastic. And you personally, how many, how many of those loans were had your name on the 1003 itself?
5, maybe.
5 or 5?
No, 5 total. I didn't. Here's what we did. We started the company, and it was, I was from 22 to 25, almost 26. I was making a lot of money, and I had a lot of friends who were coming out of college and still in school, or some that didn't go to school, saying, "Josh, how are you making like 25 grand a month? This is crazy." Right? You're like, this is, what are you doing? What are you doing? Some were at lease finance companies. They're, making 300-400 cold calls a day and hoping year one to grind out, maybe make 60 grand. By year 3, they would hope to make 100. And I looked at all my friends and I said, listen, I'll teach you how to do this. I have a process, and I developed the process for myself. At IndyMac Bank, I averaged 40 loans a month, and when I left, and the average loan officer averaged 13. So I had a very systematic process of how I took an application, how I pitched benefit, a whole philosophy of how you sell a loan. And then I basically developed that, and I sat down with my friends and said, hired the first two, sat in a room. I'm going to teach you. You get on the phone, you ask these questions, come back to me. We'll work on the benefit together. I'll show you how to present this. And I just did that 2, then added 2 more. Then, fast forward 12 months and there's, 18 months, there's 100 people in there doing the same thing. So we just kept adding and training. I use technology, which is actually why I'm having InSellerate now. I was building software back then. In 2004, I had an automated online pricer built into my own homemade CRM that I had connected with.
Hold on for a second.
I've been doing this entire time.
But where did you get the data from? Because the lenders aren't publishing actually, the data live. I mean, rate sheets. So you just this is a time actually that you probably were relying on fax rate sheets, right? 2004.
Yeah, they would send. We could get them in a Excel feed. So they would send over rate sheets as an Excel that we could print up, but we would just use it in the Excel. And we built the program that would absorb the rate sheets up, and then we'd have our own automated pricing.
Wow.
People wanted to buy it back then, and I didn't realize at the time that was that much far advanced. Because in all honesty, it wasn't that hard. Like I looked at it and said, this is actually fairly simple. We could use this technology and use a piece over here, and now we can solve an issue pretty quickly. And that's one of the ways we became successful is we use systems and processes. Build something repeatable, right? How do you make the average person as best as they possibly can be? Give them the tools and automation and best practices, put them in the best place to succeed.
Wow, that's fantastic. So, when you look at like what was from what you built back then, what do you think was like the biggest the biggest kind of game changer that you had in technology? Was it the pricing? Was it the follow-up tools? What was like the one thing where you're like, wow, how are we seeing this and everyone else is completely missing this?
Lead management, actually, lead contact management. So there's better pricing. There's better. We've seen better instances of an Encompass or an LOS that's smoother, and you can get lift in there. But what we have found and what we saw was lead management, meaning anyone who comes into your organization as a lead, whether it's someone who's, hey, I wonder if I can buy a house, or they apply online, or it's a referral partner sends them over to you. That's valuable data. Very, 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 very valuable data. There's a lot of companies or platforms that do or would do marketing automation. Let's automate marketing to those folks, which is very valuable, but it goes beyond that. So the lead management also has to say, if I'm a borrower journey, if I'm managing someone, I have to also include the phone. So when I built our first version of InSellerate in 2011 for People's Bank, which was a bank I was part of as an investor in, and we brought a mortgage company underneath, and we really helped People's Bank grow. That was kind of important from the beginning, is understanding what technology they needed for, what they needed for lending, but it was really the lead management, being able to see leads that came in, hand raisers, and be able to recycle those or connect with them or stay in front of people. So we married the phone system with our CRM that we built with the LOS. And when we put those all together, all of a sudden we saw a complete borrower journey, right? It's like if you're trying to engage the consumer and manage that transaction, how can you manage the conversation if you're not part of it, right? So we started doing inbound call round through the platform, outbound dialing through the platform, right? Basically immediate dialing. So that way, if it's a lead that comes in, we know we have to call it, managing them being called, then also emailed or text or anything else down the line. That's where we saw the biggest lift. So we could immediately see, what our salespeople were doing, and we were able to actually manage, customers being called. We did a MBA, and this is, Andrew, I don't know if I've shared this with you before, but we've done the MBA contact study for 4 years. And in that contact study, on each year, we do about 1,000 lenders. We go on their website and we apply for a mortgage, right? So we've done this for 4 years. What would you guess, out of the roughly 4,000 lenders we've applied for, what percentage of lenders, let's just say, responded to us?
Oh God, really? Like is that even a question? I'm embarrassed to say. I'm hoping that we have at least 75%, and I'm being generous here. Like
56% of lenders don't ever respond to online inquiries, not once. 56 do not respond. So if you start seeing that, it's like, wow, that's major. Like, and these are top lenders.
Wow. Okay, so then if you look at actually even like let's say the top 10%, what are the patterns of the top 10%?
That's
the people that are responding right away. Right.
So that's a great step. So the next step was the ones that did respond. How many attempts did they take to reach the lead? 1.3 on average. So 1.3 times on average is our average. How quickly did they call these leads? 3 hours is the mean time. 3 hours to call the lead, when we know from studies that consumers expect a call within 30 minutes of an online inquiry. MIT did a study and showed that if you call a lead in first 5 minutes versus 1 hour, you're 100 times more likely to get hold of them at 5 minutes versus an hour. So the propensity, so it's so important to call these leads on time. So that's just one big part of it. So when we married the system together, we can actually manage all that. Whether it's a referral, it doesn't matter who it is. And then the follow-up calls. Hey, it's been a week and a half. And, guess what? We haven't spoken to, Andrew and I haven't spoken, and you're out there house shopping. I need to be able to have a system that says, oh, I haven't called this person. Give me an alert to, give a check-in call. Now I can have a different option. So that was a huge lift. And then what we did was we found leads that weren't being worked, and we recycled them. So we were a consumer direct. We spent money. We bought the leads. So loan officers had best practices. If they didn't get a lead to a certain point on certain timetables, it wasn't open to other loan officers. 16% of our production came from our leads being recycled to our loan officers, and actually given our leads that we paid for to other loan officers. It was, that was a major changer. Again, all tied to having the phone with LOS, with the CRM and marketing automation, all tied in one platform.
Wow. So, the platform that you put together today, and I really listen. We try not to talk about too much about the company or products. It's more about the leaders. But I'm just so fascinated by InSellerate. I got to do a little, mortgage geek marketing deep dive here for a little bit. So now, in part of it, InSellerate, the telephony and texting, is that all part of built into the CRM? So my outbounds are being made right in there. My headset is being queued up. Everything it's all acting as one system. I'm not making a call separately for my 8x8 or what. It's all together, right?
That's right. So and what we'll do is, even if you say you have 8x8 or Ring Central, we'll take in all the call details and all the information from that phone system and bring them in and marry them into the journey within our CRM. Right. So you use whatever phone you use, whether it's on your cell phone, your desk phone, click the call works. We give you click the call, and we control that call, inbound call route. And you can get a phone number from us for like a direct mail piece, and you want calls to come in for, whether it doesn't matter what it is. It's a website number, whatever it is, you're getting calls transferred to. Our system will take that call. It's our number. We route it to your loan officers, whether it's their desk phone or their mobile phone. So we can control it. So it doesn't matter. We're phone system agnostic. And then we can then pull in the call detail records from phone systems like, Altigen, Ring Central, Pure Cloud, Genesis, all the major systems, that Whitetail, all those phone systems that most lenders are using. And we'll give that data inside the CRM so we can mirror it. Because I may call you at your desk phone. Well, I want to know that in my CRM because that means I've contacted you. So it's part of the journey. So we actually bring that data in and update the record that this person called us, and that we've had contact with them, and we'll know if they called us or left a message. There's a whole bunch of stuff that we're able to manage in there and kind of continue that journey. It doesn't matter what phone system they have.
Wow. So, and now do originators? Do they keep a separate phone line that's dedicated, for interaction, with borrowers through this, or are they using the regular cell phone? Yes, I know.
But they can use a regular cell phone. So what the system can do is, if you use click to call, You set the caller ID that you're going to make the call with. So if you wanted to have an office number and you want to use your cell phone and you don't want people to get your cell phone, fine. Click the call, and the phone number that the people are going to see is going to be the office number that you put in there. When they call you, we know if you're on your cell phone, we know if you're logged into your desktop, and then if you're logged into your cell phone, we route the call to your cell phone. If you're logged into your desktop, we route the call to your desk phone. So it's whatever you're currently using. We just are able to now add a layer on top of it and manage it.
Wow.
So think about all these people at COVID. If you're at home and you now have to route calls to people that are on their cell phones and home phones, you need a system. We can do that. Doesn't matter what phone system they're on, our system will route the calls to them.
Yeah. And listen, it's just like I believe, and I do want to talk a little bit about this. I mean, we created the Mortgage Leadership Outlet to talk originally about the conversation about how leaders are dealing with COVID-19. But I believe actually that a lot of the patterns that we're building and practices that we're building that have allowed us to adapt are really things that are going to land. We're going to stick with us long after we find a vaccination, and they're just better practices.
Yeah.
So talk to us a little bit about what has happened to InSellerate in terms of people interested in looking at their tech stack to address actually some of these things. Now that they, like you said, now we have all remote workers. It's a lot easier to go to a web interface to be able to upgrade where you're at in the calls to than going into a physical PBX that you have actually in your building. So talk to us a little bit about how the buyer has changed for you guys since COVID-19.
Yeah, I mean, I think a great point. What we're seeing is there's been this trend to online, and this we call it digital mortgage. That was the buzzword for the last 4 or 5 years. Someone just said it's no longer called digital mortgage; it should just be called a mortgage. This is that's what it is now.
Digital mortgage is like it's to hear something like that in 2020 is ridiculous. Actually, to know actually that we have to put the precursor digital. That's
right. Yeah. That's right.
It's embarrassing. Listen, I think it's embarrassing that it's taking anything less than seconds to actually have a decision, actually, whether we can lend this person the money. I mean, we know where the assets are. We know how much money they're making. We know actually if they've been able to pay their bills or not pay their bills. All of this stuff is existing out there and stuff, but yet actually we celebrate a 2-week close. Woo!
That's gonna. That you're absolutely right. That is completely going to change. In 2030, this market is not going to look like it's today. It can't.
2030. You think 2030? So
listen. I'm going to tell you, 2025. I bet you'll see a third or more of lenders are not going to be in business. Yeah, I think you'll see consolidation by then, because the way that it's just the scales of economy. The people that know. I mean, look at Quicken. How did Quicken become a top lender? Technology. They have invested more in the technology. That they've led the mortgage industry in technology. They've just managed it. Lenders, we have lenders. I mean, we have a lender who's grown in less than 2.5 years from basically zero loans to almost $500 million a month.
Wow.
With 150 loan officers, with I think like 500 or 600 employees total. I mean, that's a $6 billion a year origination company with less than 750 employees. Technology. So these people are out there and they're just going to eat the lunch up of all the other people that are not. Now, what's nice is I think if you look at the average age of a mortgage professional, I think it's getting closer to like 58 now. I mean, there's a big amount of mortgage professionals that are going to be retiring. And I think what will be good is as they're retiring, those businesses that are downsizing, I think it'll just be a natural evolution of they just won't rehire. So I don't think we're going to see a bunch of like job losses, because I think those people are going to retire out over the next 5 years anyway. And then the people left over are just going to absorb the rest of the volume by being more efficient.
And maybe the people that are remaining are going to be those empathetic, people who are good listeners, good at understanding the needs. That aren't necessarily the greatest at chasing page 8 of 8 that was left intentionally blank. I mean, there are a lot of actually the traditional originators, a lot of their skills, might not be necessary. They won't have to be chasing title issues as we,
Right.
maybe use blockchain to address the nonsense that goes on when you try to trust humans to keep records, because we're just not good record keepers.
That's right. Right. No, it will change. Some loan officers are dynamite because they know how to get people approved. They know the guidelines really well, and they can qualify people quickly. So that's their competitive advantage. You're right. Those things will change, and it'll be less of that, because to your point, what you said earlier, you should be able to hit a button and say, "Hey, do I get a mortgage or not?" We have all the information. It's all there. Every bit of it is there. Why? But think about it though. Lenders have been reluctant. I was a lender for many years, and we were reluctant after the market crash to really start trusting Fannie Mae and Freddie Mac and start selling loans in and using things like, liability waivers. When a HARP first came out, there's a lot of lenders that said, I know Fannie Mae and Freddie Mac's going to release us of all liability, but we're kind of afraid that we may still have some kind of reps and warrants on these loans. So there's been a fear because after, the crash, and they came to lenders and, said, yes, we told you didn't have to verify income, but they lied about their income, so it's a fraudulent loan. You have to buy it back. So they had a pretty hard stance for a while. Lenders are afraid to say, I want to jump down that train. So we're going to need some time because of regulation for this tech. That's one of the reasons why there's a stall. I mean, it's just think about it. We had the market crash. Who's going to invest in technology? No one. Then when the market started picking back up, we had Dodd-Frank. We had to just address all this massive regulation. And you had people afraid of trying to innovate because you don't want to get in trouble. And it was a very painful lesson we all learned. We all got hit pretty hard in the industry. So it's just a matter of 2025 is where you're going to see obviously a major difference. In 2010, it's going to be a whole different world. Why do you think Zillow bought a mortgage company? I mean, is it because they think you think it's because they think retail lending is going to be the wave of the future and still going to be a loan officer out in the street shaking your hand?
No,
it's what it is right now. It's digital. It's going to be virtual. People are buying homes virtual open houses. The COVID has just sped this up. So if you're a lender or whatever, you have to understand that the glimpse we've gotten over this last 6 months, about 5 months, whatever it's been, this is probably what life looks like, minus hopefully we'll be able to have more human interactions, but this is what technology and access is going to look like, and what consumers will continue to experience. Amazon Prime, all these services have record usage. Now consumers are going, wow, this is great. This is easy. They're going to want this for, they're not going to stop wanting convenience. We're not going to say, no, let's make it difficult again. They want, that's something they're going to want to continue to do.
That's great. It's so. And I love, so much of what we've talked about is focusing on the borrower experience, and even actually, listen, what you and I had a conversation when we were in Denver, talking about actually how the CFPB has created this mandate to do the right thing for the borrowers, and part of it is just making sure that you're always available to them, which I just thought that was just so simple and insightful, because if they can't get a hold of you, then they can't get a manager, then they have no place to go. They're going to the CFPB because no one's listening to them. But what a lot of people actually fail to actually recognize is that the originator is really the one who can create this great experience. And I think actually, the technology on creating a great experience for the originator. I believe happy originator, happy borrower. The originator loves using the technology, loves using the tools. That really is what gets them excited. So what are some of the things that you've incorporated into InSellerate, to focus on, the originator? And partially, I want to ask this to kind of tease up, your participation in our Originator Tech event coming up Wednesday, September 19th. So a little shameless self-promotion there, but talk to us a little bit about what actually InSellerate does to kind of enhance that, that originator experience.
Yeah, that's a great question. So more recently, we just released mobile. So one thing is, I'm going to say, is access. Right. So whether you're desktop or on your mobile phone, you have the same experience, the same access to the same data, the same workflow management. Whether it's your mobile, you can want to see your rate lock. We want to see if an appraisal's been ordered. You can do all that without having to open up a laptop and log into Encompass or to Byte or to Calyx or to LendingPad, one of the other LOSs we're connected to. You can just do that from your phone. So what we've that's given more. It's extended the adoption. It's also the lead management on the cell phone. What we're trying to do is give loan officers an easy place to work, right? So our user interface is typically, and it's actually why the company got propelled so quickly, because you use the software. It's single page applications. We really kind of try to take the Apple approach, find the best single way to do a certain process. So someone can learn it. It's done the same way. Our pages all look the same. Everything looks from mobile to desktop. It all flows the same. All the process flows works the same. So we also give your loan officers like a home screen. It's going to say, hey, here's my new leads. Here's my alerts. The alerts is where they can see great benefit. So alerts are their best. We have best practices built into the system, and then lenders can adjust those best practices. So whether it's I sent out disclosures, I want to make a follow-up call and call this person, make sure they got my disclosures, or the loan's been approved and I need to make a call to say it's been approved, or an offer's been accepted. I want to say congratulations, or it's a new lead. It's a referral partner and they've sent me a lead. I've called it once. I need to make a second call to that referral partner. Any of those types of activities are built into the system. And then they have a little dashboard, says alerts. They click on it and shows each one and says what they need to do. And then it prioritizes them. So it goes one step further. You can put it puts the most valuable ones at the top to the least valuable ones. So if you have 20 alerts and you only have 5-10 minutes to call that first one borrower, the most valuable ones up at the top. So just making them much more efficient. And then what's great is whether they use the system or not, what's helping them, all the engagement stuff works. So whether we're connecting with them on social media, whether they're getting a text message from the loan officer, a ringless voicemail, a direct mail piece, an Instagram post, Google AdWords, a phone call, that's being automated behind the scenes for the loan officer. So, whether they want to use the system or not, there's going to be a lift because now that people are being engaged with. They'll want to use the system because there's tools in there like alerts. It's telling them what's going on with their files, and then they can have access. I mean, I found myself, we use InSellerate to sell InSellerate. It's a tongue twister.
Oh, really?
And I use my phone, and we have alerts. And I was on my phone on a Saturday. And I'm like, I have like some alerts. I clicked on it. I'm like, oh, wait a minute. Those are a handful of proposals and demos that we had done. I was part of with my team. I need to follow up on those. And I emailed to them and say, hey, listen, can we meet this week? And they both said yes. But the point is, I now had access to that data, which otherwise I probably wouldn't have. And I had those alerts that told me real quickly from one screenshot what was the most valuable people to look at first. So I became super efficient. And I was able to use that, and it worked really well for me. So it's something I'll do again. I'll go and I look at my alerts and I work from the top down, and it seems to be effective for us.
So Josh, do you think actually that does the mobile experience, do you try to actually replicate or do everything that you can do on a desktop or your laptop, or is it just basically to address actually your that sitting around, waiting for something to happen. So I pull out my phone and see what are the alerts that I can respond to. Like, what's the theory? Is it the idea to eventually leave the laptop?
Yeah. So for the loan officer, it's there now, meaning you don't have to have the laptop at all to interact with our platform. The mobile, what you can do as a loan officer through the desktop, you can do everything through the mobile app. No difference. All the same functionality, same workflows, same CRM, lead management. The alerts that are in your mobile are the same alerts prioritization that you see inside the desktop. All the same functionality. So what we're really doing is whether or not your mobile or your desktop, you have access, which in either case. And so it allows you to, you're walking the dog. Someone applies, you're out there walking the dog and someone applies for a mortgage through your POS, right? Well, you could call them right then from your cell phone or text them from your cell phone, right? You can automate it. So actually when they apply, your phone rings, lets you know, oh, new lead. You answer it and then you open up the system and you know, hey, Andrew, how's it going? I see you just applied. And you can, it looks like and you can look at the information. So now you can, bridge that gap if you want to, or you can text them or have automated text that says, I'm working, please call me, whatever you want to do, right? So that's, I think that's what becomes, really powerful.
Oh, man. So listen, I want to ask you, what are the best practices that the top lenders are doing that we can do? Because I know, listen, well, you have some large mortgage companies that use your product, but what I love about InSellerate is that you have some technology that small to mid-sized mortgage origination units can use. I mean, I know brokers that are using your system love it, but so what are some of the best practices that these top originators, like the companies that are the best actually, in lead management, what are some of the things that they're doing that they can, that small to mid-sized origination units can do, whether they're using InSellerate or using any other CRM platform, that they don't need a $1 billion advertising budget and $1 billion tech budget to be able to do?
That's a really good question, and I think you said it. Which ones are good at lead management? Because some of the top lenders, they're not necessarily top lenders because they have great technology. They have top lenders because they have a following and they've been able to recruit top loan officers through the years and make them a happy home where they want to work, and that's how they grow. Which is, I'm not knocking that. I'm just saying that's not because they're technology driven and that's why they become successful. Then you have lenders who are top lenders and they are technology driven, right? So what those ones, and what is really fascinating is it's never been a better time to do this. Because I can tell you right now, with all the lenders that we serve, with the lenders that we've sat down with, whether or not they use our product now or not, I mean, hundreds and hundreds and hundreds of lenders in the industry. We have over 100 lenders on our platform now, which means we've spoken to all the top lenders and gone through products. What's surprising is very few of them are actually doing some really basic things that you, as any size lender, can do. And
really?
Really around engagement. So I'll give you.
These are people that have you. They're your clients that have the access to these tools that they're just not using. So it's not even that they need to be brought to the water. They're at the water and they're just not drinking it.
So our client, it's a good point. Our clients, we've done a really good job proactively to set all this to get them to use these tools. I'm saying just in the broad strokes of our clients in the marketplace, we'd be very surprised where the lenders are at, right? So we addressed this a year and a half ago with our engagement platform. We had built tools, to your point, and we brought them to the trough, but they weren't drinking. And we kept saying, why aren't they using these tools? Why don't they build these things? Why don't they do this? And we realized, they don't know strategy. They don't know when they should call or text or email or do a Facebook post. They don't know all these things. And they don't have all the content. So we built it all, and that got them to use it, right? And that's what really engaged them. But like something simple of retargeting. Someone goes to your website, you should drop a cookie and you should retarget them with an ad, and you can do cross-platform retargeting. We can take the lead, we can then cross-platform and market them on Facebook or Instagram. So you can show up immediately as one of the biggest lenders in these people's world. And I can tell you, the top 10 lenders aren't doing this. A couple of them are, but most of them aren't. The top 20 aren't doing this. Some lenders
that are like, if you go to a web page for any of these two companies, you see them and you'll be tracked, and it's phenomenal. And you can just copy their strategy.
it's and you can use, so we can automate, and that's it's one of the things our platform does. So, and again, you can do this yourself. So you can do build a custom audience in Google. You can build a custom audience in Facebook, and you can manually take people's information and every day type them in there, or use a system like ours that just does it for you, takes information and puts them out to all the different platforms. But you can target someone. So let's say someone raises their hand and they fill out a loan application on your POS system because your real estate agent gave them that link, or it's a consumer direct shop and they did it directly. That information goes into our platform. We then find them and we can put them into a custom audience in Google AdWords and Instagram and Facebook, so that whether Andrew Burnham is my Facebook friend, if you're in my world, I can actually market to you an ad. You don't have to be my friend. I'm actually going to show up as a feed in your ad. So now I have access to the entire world. So you can do that manually. You can manually take every day, take a list and upload, or you can automate it. So those are things that if you interact with InSellerate, you'll see us in places. I found someone said that we use our technology to run our stuff. I've shown up on video games or on cell phones because we're using cross-platform retargeting. We're using Google AdWords, and we're doing custom audiences in there, and we're actually You can show up when someone's going to be playing a video game on their phone, Angry Birds or something. They can see the ad for you as a mortgage company. Yeah. All of a sudden, you become well-known, right? You become familiar. They trust you. They know your brand. You have more places to interact with them, and you're going to be there more often, to get the business. So then you can do that. You don't have to use software to do that. You can drop cookies from your website, and that's actually something your website does. You don't use that piece. There's no platform that does it for you. You just go to Google and you just put in the code and you drop a cookie and you can retarget them. That's really easy pickup, and people don't do that. Or how about this one? Answer the phone and call leads back. Right, 56% of people still aren't doing it. Do it. Call people. Try to make sure you call every lead 3 times. Not 1.3. Like call leads. Like that's a best practice. I mean, this is simple stuff. Right now, what I'll tell you, what we do see what big lenders do, and I think is different. That again, you can do as a small lender is your data alignment. You have to, whether you're a broker, whoever you are, you have to start thinking about these customers you're talking to and you're interacting with are unbelievably valuable, right? If the average person has 7 to 11 transactions in their lifetime, every bit of these people, whether they do a loan with you today or not, that's valuable data, valuable information where you can stay connected, you can be in front of them. So you need to have aligned data so you know what's going on. Right. So, you know who's calling them, who's emailing them, everything's systematic. So you're doing that, you want to manage these things. So that way, today, tomorrow, 10 years from now, that's money in that's money in the bank. I mean, Countrywide, obviously they're, like IndyMac, they're not in the business because they were just happened to be the biggest, they're the biggest people at the time went out, but their whole business model was to the value of the servicing portfolio. Wasn't loan number 1. It was loan number 1, 2, 3, 4. They had a long view value of customers, and they would even acquire new customers at a break-even point just because they thought they knew that was valuable to them. They would sell them a new loan in 3 years and in 7 years.
Just out of curiosity, and any idea what the retention rate was for Countrywide? I hear people talk about it. The biggest lender today, it's somewhere in the 80s. But any idea what the retention rate was for Countrywide?
I don't know. I don't. That's a good question. I have to imagine Countrywide had to have one of the highest retention rates in the industry. Now, industry wide right now, it's 19%. Now it depends where you're talking service and retention rate or repeat. There's a lot of different stats out there, and what do they mean? Black Knight had a stat that said only 19% of consumers go back with the past lender.
Yeah.
So retention is horrible. Customer for life stuff is really bad right now. Brand loyalty is at an all-time low in our industry.
So now, and what does it take to get to those top levels? Like, so to be actually in the top 10%, so where people actually are right now saying that 19%, there's a 19% chance that you're going to go back to your original mortgage bank, and that's assuming they were contacting you. Who knows? There's all sorts of variables there. But what does it take to be at the top 10%? To make sure actually, that you're the mortgage bank, mortgage broker that's being considered when that refinance opportunity comes up.
I think, I guess culturally and just top down would be, think of, I've always said this in the mortgage industry, we're in a manufacturing business. We're producing cars. Now, they're not physical cars, they're loans, they're being manufactured, and we have all that same type of market and sales, everything from the start to the finish, and we're trying to push a product out. You have to understand and look at that from operationally the same way, and then also from the consumer the same way. How often are you asking things from the consumer? When are you asking things from the consumer? How you're managing the consumer, lay that borrower journey out. And then it's about laying on top of that, when should you contact? How do you make sure you have a strategy that makes them the happiest, right? That communicates them in a timely fashion, that keeps them engaged with your brand. So you literally, a whiteboard, white float, draw it out, actually, rehearse it, and just, here's Sally. Sally does do a loan. Sally doesn't do a loan. And understand what that looks like, so you can then from there go, all right, well, here's all the touch points. Here's the places, we can make improvements. Here's things we can automate, because it's like a production. Have you that movie Founder about McDonald's? Have you seen that movie?
Oh yes, yes. Okay.
I love that movie, and I thought that was fantastic. And think about how they actually went to that tennis court and drew out a production and visualized what it would actually be like to cook in the kitchen, right? So they could see where they put the fryers and everything. So when they were making hamburgers and French fries, they had the fastest, most efficient operation to sell hamburgers and French fries as quick as possible. Like, that whole scene, it's similar. I mean, you're not making French fries and hamburgers, but you have a customer coming to the window, and you have people inside here who have to take the order, produce it, and come back and give it to someone. And how everyone works together and how you communicate with the customer all matters. And so lenders, whether you realize that or not, you have that production going on. You may have like a lot of stalls in the play and dead stops where, whoops, that customer got forgotten, or we never responded to someone who applied online, which is happening. Yeah. So there's obviously a lot of improvement, but think about that. Your borrower is the person, and you have to understand, make it easier for them. How do you communicate with them? What does that experience look like?
That's phenomenal. So, hey, Josh, I want to get a little personal here with you. So I know actually I was happening to just doing a little searching and talking a little bit about watching some of the videos where we're talking a little bit about your personal life and talking about how, this is more than just money for you, that you do this actually with a more of a purposeful mission than just, hey, let's try to actually do whatever we can to be number one, to just be number one. Talk to us a little bit about your personal mission in life.
That's a good, that's a good question. I mean, I think, if you're talking about my background, depending on what videos you've seen, you probably, I don't know if you watched one with my sister. My sister is a CEO of a nonprofit charity that serves homeless kids in Orange County. Something that I experienced as a child. So my mission or purpose, really has been, how do you, first it's enjoy what you do. And then as I became an employer, it was, how do I make jobs for people that really enjoy what they do as well? How can I better something? Right. We've given the charity through the years or something that's really important to us. And then when I was a lender, for me, one of the reasons I'm so passionate about this industry is it gave me a huge opportunity, right? I went from not having, a stable background to now I've gotten into industry where I've had a lot of success, right? People are going to look back, that's what you would look at. So I've had a lot of success with people defining success financially. And it really isn't about the money. It's about helping people, right? And here in this industry, what I really liked about being a loan officer was I helped customers all the time, right? When we were doing loans back in my first mortgage company, we did a lot of subprime loans, and I felt really good about those loans. We saved our average customer like $745 a month. You save the average American that much money a month, it's almost $10,000 a year. It's a lot of money. So we felt really good about that. And then as the lender and having employees, felt really good about watching employees buy their first home, or that was a really great experience for us. So that's I think what we celebrate more than just trying to be number one or be at the top of the game, because we have to have some type of purpose and we have to have service. Really, we're in the service industry. As a lender, we get paid for service. So I get paid for service. I'm software as a service. So I have to be of service. So I think it fits well aligned with our what our family mission has been. Jen, sister runs a nonprofit. Jack had been a missionary. So we've done a lot of work around that.
Wow, that's wonderful. That's so is there a point where you see yourself dedicating more time on philanthropic activities and less time actually on helping to empower the most sophisticated mortgage companies in their marketing?
Yeah, so I think that the next phase of what I'll do in that area is, instead of donate money to charity, is actually use some of my entrepreneurial skills to help build something for charity.
Wow.
So social enterprise, I think there's a lot of that can be done, right? So you can write a check. Someone can write a big check and give someone $1 million, or they can write a check and give someone $1 million that pays that charity a return of $400,000 a year and potentially provides jobs. There's small examples of like people, churches, or nonprofits that will buy a Subway. And then the people within that nonprofit that need help, that need jobs, right? The people they're serving first, they have a place to give them a job. to then have a profit and income to then help serve, even more and, above and beyond. So that, I would like to start using some of my, entrepreneurial skills and more social enterprise in that sense, sense.
So maybe like an InSellerate for nonprofits. Like, you have this amazing system. And listen, think about this. I mean, it's you have donors, and donors actually they are people actually that need to be sold. While they
you're right.
Limited money, and they need to understand actually why actually that money is going to be well placed for that organization, and it's a sale process. As someone who's worked actually with various nonprofits, work for golf outings to try to do everything we can to kind of support actually the local community projects. It's a sales project. So like this technology really would be perfect for just helping people, which in many cases are volunteers. That don't have the time and ability and the kind of the I guess the timeshare that they would like to give it at this, but no one on the weekends said they could just click the alerts on their phone.
True. Yeah, no, that I have not thought of that. That's we could come up with a free or greatly reduced cost CRM for nonprofits, and that would be a way to serve nonprofits. And the truth is, listen, what we can see about out there, whatever the technology is, engagement is engagement. Whether you're selling someone shoes, a mortgage, asking them to give you $10 to save the children, however you're branding in front of that person, engaging in front of that person, it's engagement. Just like the term business to business or business to consumer, right? We sell business to business, right? Obviously but we're the marketing approach. So we realize, and this as well, is why people are getting more personal. We're still selling to the consumer. You're still a person. So that never goes away. That always stays the same. So, having that, personal touch is, that's always going to be how, the market run. The market's going to continue to run like that.
Listen, I mean, I agree 100%. It's all about a personal thing, but if we can actually figure out what the practices of the best lenders are, or whatever, best marketers. It's not just the best lenders. And it's something that you seem to have figured out early and have been actually putting it into your own use, and then later on making it available to the fortunate licensees of InSellerate.
Yeah. Cool. One of the things, Andrew, to highlight that is, in the last 3 years, we have processed over 2.6 million borrower applications on our newest platform, and have handled over 66 million prospects.
Wow.
So now some of the 66 million prospects could potentially be duplicates, same lenders trying to market to the same people about the same lead, but 66 million individual lender records, over 66 million for prospects for people to market to that they're marketing to and engaging with. So if you look at that, and that we email, text, phone call, automate direct mail, Facebook, Instagram, ring his voicemail, and phone calls. We have all these channels. So that's hundreds of millions of transactions and data points and interactions with these consumers, whether they're retail, it's a referral partner lead, or if it's an internet lead from LendingTree. So we have a lot of this data. Your point, Andrew, is best practices. So it's how do we make, what I want is, so our lenders, I do want our lenders to win. I want to give our lenders the best tools possible so they can provide the best service possible, and I want them to win, right? And I'm passionate about the loan officers. I don't like the term loan officer. I prefer loan consultant. Loan officers aren't trying to keep people from getting loans, and they're not the ones saying yes or no. We're trying to help you get the best loan possible. It's more of a consultant than a loan officer. Agreed. So, how do we serve our customers better? And that's really the value chain. And we make the loan officers, as efficient as best they can. They can do their best job. They can help consumers the best. If we can lower the cost to produce loans for lenders, what will then eventually happen is costs to the borrowers will go down. It's a great, it's a great overall effect, and it's going to happen. Cost to produce loans are upwards of $8,700 a loan, when they used to be $3,900 in 2009, according to the MBA. That has to start going down at some point. And so technology like this is, part of that process.
Yeah. Wow. It's fantastic. Josh, great story. really excited to do the deep dive into your into InSellerate on Wednesday, September 9th. Are you guys going to be able to show the mobile, the new mobile experience in that? Okay, fantastic.
So I'm super excited about that too. That we're going to show the mobile. We're going to go through the experience and really lay out what you can do what does this do for a loan officer, right? And take you through, what the borrower journey process and as a loan officer, and give lenders the idea of this is what this means, to have this type of technology in a mobile phone.
Fantastic. All right, Josh, always great to spend time with you. Thank you so much for joining us today.
Andrew, thank you. I appreciate it.
All right, everyone. Thank you for joining us for another Mortgage Leadership Outlook. We come to you Wednesdays at 4 o'clock East Coast time, 1 o'clock Pacific time. Join us next week. Thank you so much. We really appreciate it. And if you can, please make sure you follow us on Facebook, LinkedIn. We are also on YouTube. We're on Twitter. This is broadcast to 4 platforms. So find us wherever you did and subscribe to us. You'll get notifications in the future. And thank you so much, everyone. Have an amazing day and stay safe.